At the same time, you got the IMF comes out and says just last week that the world economic order is undergoing currently a major reset. I mean, all of these things together, Andrew, you put them together and it tells me that there is something much bigger in store for gold than the world is prepared to understand or accept. And that's why you see the biggest, smartest money in the world. It's not just that they're the wealthiest, these central banks and sovereign wealth funds, but they're the most well-informed. And to me, that's currency that you can't put a price tag on. Information ahead of the crowd is worth so much. But yet they seem to be dropping crumbs, when Trump says he who has the gold makes the rules. I mean, really? When have you ever heard a president say anything like that? So I don't know. I think this is going to be a very interesting few years, maybe more so in a different way than the last. This is a little bit kind of connecting dots that maybe I'm just trying to find a way to connect them. But about 5 weeks ago, I have a friend who belongs to Trump International Golf Course in West Palm Beach. He brought me golfing there, and Trump was there playing with Ron DeSantis. Secret Service there, with dogs and the whole 9 yards. And they talk, right? I mean, Trump lives in Florida. They talk, he and DeSantis. And so I think it's interesting that they just passed, it just needs to be signed now by the governor who said he's going to sign it, that gold and silver are now going to be maybe the most comprehensive bill in the country, legal tender in the state of Florida. Anyways, American Gold Eagles qualifies legal tender. The bill recognizes gold and silver coins issued by the U.S. mint with high purity like gold eagles and silver eagles as forms of legal tender within the state. State acceptance is optional. Florida agencies may accept gold and silver for payments like taxes or fees. We're beginning to see states move this way too. Utah and Texas and Wyoming and now Florida, Oklahoma. You're seeing states in the United States embrace gold and silver as legal tender. You're seeing the United States become a massive importer. Gold is tier one. Something is changing, Andrew, with gold and silver. And to me, that's just the bottom line. I mean, that's a name for your thumbnail. Something is changing with gold and silver. There's no question about it. And I can't quite put my finger on it, but you're right. That volatility, that round trip volatility, which seems to continually step up a little higher, but that volatility is enough to make everyone bail. We saw the exact same thing about 4 weeks ago. Gold shot up. It got knocked down $200, shot right back up to 3,500. It gets knocked down and it will climb right back up. I mean, it's the nonsense, numbers like on inflation, where we're supposed to believe that in inflation, the numbers just came out, have cooled down. They haven't cooled down at all. And it's the measurements by which we gauge inflation is nonsense. Or when we talk about silver getting nuked straight through the floor with zero news in the middle at 4 a.m. Eastern time, that's not price discovery. That's price demolition. And it's an algo smash. And again, this is done for effect. And maybe it is done so some of these banks can get their house in order, at least in terms of buying at a muted price in order to, or to knock that funds out, to drop the price, to cover their shorts with physical, to become Basel III compliant. I don't know what it is. The volatility doesn't bother me. There's something under the surface, and there's sprinkles of information by the people in the know that tell me this time it's different. I really do believe that it is different, and the world understands it. And fortunately, I do believe this new administration understands it as well.
By now, if you're still ignoring the signs, you're either asleep at the wheel or you just haven't been paying attention. The reset, it's not coming, it's already here. The International Monetary Fund, yes, the IMF itself, openly said just last week that the global economic order is undergoing a major reset. Not behind closed doors, not in some conspiratorial backroom, out in the open, publicly. And if that doesn't tell you that something seismic is unfolding right under our feet, then frankly, nothing will. Folks, I've been doing this for over 30 years, and I can tell you, I've never seen the level of elite activity in the gold and silver space like I'm seeing right now. Central banks, sovereign wealth funds, these are the most well-informed entities on the planet. Not just the wealthiest, but the best connected. And they're loading up, quietly, discreetly, but deliberately. The question we need to ask ourselves is why? I mean, you've got the former president of the United States, love him or hate him, Donald Trump, standing up and saying, "He who holds the gold makes the rules." Let that sink in. When have you ever heard a sitting or former president say something like that? It's not a joke. It's not a slogan. That's a quiet nod to the ancient truth of sound money. That's not rhetoric. That's a signal. That's the kind of message you whisper to your allies and your enemies right before you roll out something big, like maybe a new gold standard. And it's not just noise. This isn't just Twitter chatter. Although, by the way, Twitter is where the truth leaks first, not CNBC. Let me share something personal. About 5 weeks ago, I got invited to golf at Trump International in West Palm Beach. Not bragging here, just connecting the dots. Trump was there. Ron DeSantis was there. Secret Service dogs, the whole 9 yards. These guys talk. They're in Florida, practically neighbors. And wouldn't you know it? Just this past week, Florida passed what might be the most comprehensive sound money bill in the United States. Gold and silver, legal tender. Not maybe someday. Now gold eagles, silver eagles, U.S. mint coins with high purity, are now legally recognized as money in the state of Florida. And not just some ceremonial gesture. Florida agencies may begin accepting gold and silver for taxes and fees. Let that marinate for a minute. We're going back to a monetary structure that predates the Federal Reserve. That's not just a symbolic move. That's the beginning of a parallel system. Texas, Utah, Wyoming, Oklahoma, they're all doing it too. Slowly but surely, state by state, we are watching a quiet rebellion take shape, a decentralization of monetary power. The states are starting to opt out of the dollar monopoly. And when that movement hits critical mass, when enough states begin to embrace real money again, you'll see a level of credibility rush back into the system that Washington hasn't had since Nixon killed the gold window in 1971. And let's talk about the dollar. You want to know why gold is the play right now? Look at what's happening with our currency. This isn't about inflation numbers anymore. Those are rigged beyond recognition. We've all seen the CPI basket get hollowed out, swapped out, reweighted. It's statistical nonsense. We're being gaslit. 1 week inflation is cooling. The next week it's hot. Then it's resilient. It's like watching a weather report written by a hypnotist. Meanwhile, gold gets nuked at 4 a.m. Eastern Time. No news, no volume, just an algorithm slam straight through support. You think that's price discovery? That's not a free market. That's price demolition. That's manipulation in plain sight. You wake up and silver is down 8% for no reason? Come on. That's not how real markets behave. This is suppression by design. Whether it's to allow the big banks to cover shorts, or to give the central banks one last chance to buy physical at basement prices, it's all orchestrated. I'm not talking conspiracy theory here. I'm talking about Basel III compliance. I'm talking about big institutions being forced to get their house in order before the music stops. And what about imports? Did anyone notice that the United States, yes, the world's most gold-averse central bank jurisdiction, is quietly becoming one of the largest gold importers on the planet? Why? If gold is a barbarous relic, why are we sucking in so much of it? Because gold isn't just shiny metal. It's Tier 1 capital. It's money that doesn't rely on anyone else's liability. The BRICS know this. That's why they've been buying at record pace. India, China, Russia, even the Gulf states, they're draining the West of its gold. You think it's a coincidence? This is a chessboard. And we're being outmaneuvered by people who still understand that money must be rooted in trust. And trust, ladies and gentlemen, is evaporating. The world no longer trusts the dollar. That's the truth. Oh, sure, they'll smile at us in meetings, but behind closed doors, they're dumping treasuries and buying gold. Russia and China have created an alternative to SWIFT. Saudi Arabia has flirted with pricing oil in yuan. And the IMF itself is calling this a reset. That's not conspiracy talk. That's a public memo. The game is changing and fast. Now let's talk about volatility, because that's what everyone gets scared of. Oh, gold's too volatile, they say. Silver's down 10% in a week. I'm out. Listen, that's exactly what they want you to do. They want you to believe that this price action is organic. It's not. It's meant to shake the tree, to shake you out of your position so the big boys can step in and scoop it up.
I think that picking a number is very challenging. Of course, you have Goldman Sachs saying as high as $4,500. You have other mainstream pundits saying $3,700 to $4,000 in that range. Talking about gold reaching a level, in the thousands of dollars higher than where we are right now is not that outlandish. First of all, if we were to look at the United States becoming a net importer of gold, I don't ever remember it being a net importer of gold. There were 1 or 2 years where we did have net imports, but not like we are seeing now, where, more gold has been imported to the United States since January than at any time since the end of World War II, when we took over for the pound sterling at the Bretton Woods Agreement. Everyone sent us their gold. Something big is happening. with gold. And of course, you see Trump's tweet the other day on Easter Sunday. He says, the golden rule of negotiating success, he who has the gold makes the rules. Thank you. You see talk of revaluing gold, which was held in the gold revaluation account. That's actually the name of it, which you can't make up, whether it be the head of the Bundesbank or the Dutch National Bank or members of the governing board of the Bundesbank, whether we talk of Judy Shelton, Trump's former nominee to run the Fed in 2016, who advocates for 50-year treasuries backed by gold, or the Treasury Secretary currently of the United States, whose largest holding was gold while running a hedge fund and prior to becoming the Treasury Secretary, and is a self-proclaimed gold bug. There's so many things happening that make you wonder and think. Now, to Jan's point, it would certainly benefit the United States and all the central banks to see gold revalued to a much higher level, whether it be by the market slowly, as we've seen, slow and steady, tremendous appreciation that's gone unnoticed by the mainstream, which is really shocking to me, which tells me we're still very early in the game, or something more dramatic where, they come in and revalue gold. Every $4,000 increase in the price of gold gives the Treasury General account $1 trillion free and clear. So, you see gold at levels of, 4,000, 8,000, 12,000, whatever that number is, at $12,000 an ounce. And I think that's the number that James Rickards came up with. You're giving $3 trillion free and clear to the Treasury General account. I did a little bit of math myself after watching a great video by Mike Maloney. Mike Maloney's video talked about when gold was backing the currency prior to 33 over my shoulder there, it was just backing M1, which is the notes in circulation. M2 is a broader measure of the money supply. They got rid of M3. They said it was archaic. So currently the broadest measure that we have access to is M2. And that's largely credit. It's 92% credit. So when you look at your bank account and you see $50,000 in there, that's credit. That's M2. The bank owes you the notes. They promise to pay it to you. But M1 is the currency in circulation. M2 is only 8% currency, 92% credit. So when gold was backing the dollar prior to 33, it was backing M1. And if you take M1 right now, 2,365 billion, and divide it by the 261 million ounces we supposedly have, you get $9,044. Could that happen? Yeah, why not? I mean, why not? Why not revalue gold to a level high enough to start to whittle down the debt?
I've said this before, but it bears repeating. Price is a tool of deception. If you're watching the daily moves in gold and silver thinking they reflect supply and demand, you're watching shadows on the wall. What matters is flow. What matters is who's taking delivery. What matters is who's getting out of paper and into physical. Let's talk about delivery, specifically COMEX. Over the past 2 years, we've seen record levels of physical gold and silver being drained from COMEX warehouses. And not by hedge funds flipping contracts. We're talking about eligible metal being pulled out by long-term holders, sovereigns, institutions, family offices. This is not speculative behavior. This is defensive positioning by people who understand what's coming. Do you think Poland is buying gold by the ton because they're feeling festive? Do you think Singapore is increasing their reserves for fun? These are deliberate, calculated moves by serious players. Countries that have lived through currency collapses. They know exactly what it looks like when the music stops. Now take a look at China. Officially, they've been reporting steady gold purchases through the PBOC for over a year now. But unofficially, the number is likely much higher. Why? Because much of the gold is being accumulated off-book through state-owned commercial banks and through Shanghai. And it's not just accumulation, it's transformation. China is building a parallel system, one that's not reliant on Western clearinghouses, one that's immune to SWIFT sanctions. The Shanghai Gold Exchange is already a hub for physical settlement. The Shanghai Futures Exchange is gaining credibility globally. They're building a physical gold market that reflects actual demand, not the broken derivative-heavy system we have in the West. And here's the kicker. While the West is selling paper gold to suppress prices, the East is taking delivery of the real thing. This is a wealth transfer unlike anything we've seen in modern history. The West is bleeding its strategic reserves for the illusion of dollar strength, while the East is stockpiling real, enduring wealth. This isn't theory, it's trade data. In 2024 alone, over 1,500 tons of gold flowed into China. That's not just investment, that's monetary policy, that's insurance, that's preparation. Meanwhile, in the US, we're still gaslighting ourselves with nonsense like inflation is transitory, the economy is strong, and the consumer is resilient. Let me ask you, have you been to the grocery store lately? Talked to a small business owner? Looked at your heating bill? The truth is, the American middle class is being hollowed out in real time, and Washington's response is to double down on spending, inflate away the debt, and suppress the warning signals, chief among them gold and silver. And yet, despite all that, gold is still breaking out to new all-time highs. Think about that for a second. Even with the relentless suppression, gold has punched through $3,200 and is consolidating at higher levels. That tells you all you need to know. Because it's not retail that's driving this move. It's not Reddit. It's not ETFs. It's central banks. It's sovereign entities. It's the world quietly turning its back on fiat and realigning with real money. Now let me be crystal clear. I'm not telling you that gold is going to the moon tomorrow. I'm telling you that the revaluation is already underway. The world is voting with its feet. And gold is once again being remonetized, piece by piece, country by country, policy by policy. And silver? Don't get me started. Silver is the most undervalued asset on the planet right now. You want to talk about a coiled spring? Silver is being suppressed harder than anything I've seen. The open interest on the COMEX, the leasing rates, the SLV drain, the backwardation, it's all screaming the same thing. There's not enough silver to go around. Yet the price action tells you it's just a boring industrial metal. That's the trick. That's the con. They want you looking elsewhere while they quietly empty the vaults. Look at the US Mint. They've been rationing silver eagles. Not because of demand, but because of lack of supply. Dealers are paying double-digit premiums just to get physical. That's not a healthy market. That's a warning sign. And just like gold, silver is being drained from Western vaults and shipped east. India imported record amounts of silver last year. Why? Because they see it for what it is, a once-in-a-generation arbitrage. Buy it cheap while the West suppresses, then wait for the system to break. That's the strategy. Let's circle back to Trump and DeSantis. That Florida bill to make gold and silver legal tender? That's not a fringe idea anymore. That's mainstream monetary policy. And more states are lining up. Missouri, South Carolina, even Idaho, they're all introducing similar bills. The goal here isn't to overthrow the dollar overnight. The goal is to give Americans a parallel escape hatch, a way to opt out of the broken fiat system without having to flee the country. Think of it as monetary federalism, and it's gaining steam. Because here's the thing, no one wants to be the last one holding the bag. No one wants to be stuck in a dollar that's being inflated away, taxed invisibly, and backed by nothing but IOUs. People want real value, tangible value. They want the money their grandparents used. This is the great quiet revolution of our time, and it's being led not by protesters or populists, but by central banks, lawmakers, and billionaires who see the writing on the wall. The Fed? They're trapped. The debt is unpayable. Interest rates are already breaking the back of the federal budget. If they raise, the government collapses. If they cut, inflation explodes. That's not a choice. It's checkmate. So what do you do if you're an insider? You front-run the reset, you accumulate gold, you align with real money, and you wait for the crowd to wake up. Let me close with this. In times of uncertainty, people don't look for yield, they look for safety. And gold is the ultimate safe haven. It's not a trade, it's not a speculation, it's an anchor. And in a storm like this one, you don't need a forecast, you need an anchor. Silver is your leverage. Gold is your insurance. And if you're not holding physical, you're just holding paper promises. So as we move into the next phase of this monetary reset, remember, don't watch the price. Watch the flow. Follow the big money. Look at where the gold is going. Look at who's taking delivery. Look at which states are passing sound money laws. That's where the future is headed. The volatility, ignore it. That's the trap. That's the distraction. That's how they shake you out before the re-rating. Think long-term, think sovereignty, think security. As Trump said, he who holds the gold makes the rules. And for the first time in over 50 years, the rule book is being rewritten. Stay strong, stay informed, and above all, stay allocated. We'll catch you in the next update, because this story, it's just getting started.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.